Hello and welcome to the Islamic Finance Show. Throughout this series, we've been looking at what Islamic finance is and how it fits into the mainstream finance world. We've been examining specific areas such as Sharia compliance and riba. On today's show, we're looking at one of the most important elements of Islamic finance, Islamic banking. Joining me on the show today is Dr. Samir Al-Ahmad, who's the head of Sharia compliance and product development at Al Rayan Bank, alongside with Omar Sheikh, advisory board member on the UK Islamic Finance Council. Welcome to the show, guys. It's such a pleasure to have you on. Thank you.
Thanks.
So let's get right into it. Dr. Al-Ahmad, conventional banking and Islamic finance banking, or Islamic banking, what is the difference?
Basically, we can summarize the difference in maybe 4 key points or factors. The first one is the Sharia compliance governance. The second one is product. The third one is operations, and the fourth one is conduct and behavior. If we tackle the first factor, the Sharia compliance governance, Islamic banks have Sharia supervisory committee and internal Sharia compliance department. This is to ensure that all the bank's operation and transactions are in compliance with Sharia. They approve all product and services launched by the bank. So this is something, of course, conventional banks don't have.
Right.
The second factor is product. All products and services offered by Islamic banks are structured and based on Islamic finance principles, and they should meet the Sharia requirements for those principles. The third one is the operational aspect. So it's not sufficient only to structure the products on the Islamic finance principles. These have then to feed into the operational processes in terms of procedures and processes of opening accounts, etc., for customers. Then the finance department.
So it's not just the product; it's also the way that
it's the whole cycle,
right,
exactly, which will affect all departments in the bank. Finance department in terms of calculating and paying profits to customers. The system itself in terms of its calculation of the profit and the product schedules, not misleading the customers,
right,
etc. All the ethics, the Sharia ethics around selling the product.
Sure. I mean, it sounds like there are really a lot of substantial differences.
Yes.
Now, are the differences so substantial, though, that it means that one has become less effective than the other? In simple terms, I'm interested to know, is Islamic banking effectively more expensive than traditional banking? Omar, if you could shed some light on that for me, please.
I think the pricing is a separate issue. I think the first thing is you have to understand, as Samir was saying, it's a fundamentally different nature. If I can just add to that, I think the biggest difference is the principle. At a principle level, Islamic finance is about risk sharing, equity sharing, whereas traditional banking is about perpetuation of a debt-based, traditionally an interest-bearing debt-based relationship, and the intermediation role associated as well with that. So that's the core difference I would add at a principle level. Your point on pricing, does that mean that Islamic banks need to be more expensive in their products? Well, no, not necessarily at all. I think pricing is subject to many other factors. How much do you want to spend on your systems? How much you want to spend on your marketing? How old and how your bank is, how efficient you are, how much market share you have. All of these things are factored into your cost base, which can then influence the price at which you can...
But it is a niche market, isn't it?
You could say it's a niche market. No, it's a different strategy. And as a result, Islamic investors have received a lot more money and returns on their investments, particularly in their equity portfolios over the last 7 years, the way the markets have moved. So in a way, actually, no, that's not the case. There are implications of that investment strategy of being ethical, of having investing in stocks which have less debt, which have resulted in a better return. But on the banking side...
on the topic of returns...
That's true. Just I would like to add something to...
What's your opinion on the rates? Because we're talking, because I want really practical information for our viewers at home. Are there, from your point of view, as someone who's part of Al Rayan Bank, are the rates on a practical level, on the high street retail level, are they better?
In fact, they are very competitive in the market. Although, sometimes you look at it, it's not fair for customers to compare Islamic bank, retail Islamic bank, with very old, big traditional banks and the rate they are offering, which they subsidize from other business functions or their investment arms, etc. So it's basically important for the bank to be competitive, and that means that the bank will try to basically cut their cost as possible, and accept a very small margin in order to be able to be competitive and provide better pricing to customers in the market.
I mean, commentators...
So if I can just add
Sure,
on that.
sure.
But I think we have to, I think many of the viewers will know this who've engaged in the products. We have to also take this in context of the reality. So pricing, how you price a product is a business decision. It's not a Sharia decision. Only when you're profiteering that the Sharia will come in and say, hold on a minute, what's going on here?
Yeah.
So that's a business decision. And if we look at the early days of Islamic banking in the UK and the products from some of the very early providers, the Al-Manzil product, which was from Ahli Bank, their mortgage, which was done on a murabaha basis in this country nearly 20 years ago, was twice as expensive as a conventional mortgage.
Yeah.
Now, guess what happens? Later on, HSBC comes into the market, Al-Buraq comes into the market, IBB's in the market. All these players are there. And what happens to the price? No surprise, it begins to drop down because competition forces that price down. And it becomes very competitive when compared to conventional products.
What's happened to it?
Well,
I mean, I don't think there are as many players in the market anymore. It's a very small amount of players now. Does that mean now, because of the lack of competition, so to speak, the rates are going to go back up?
In terms of the pricing of Islamic mortgages, home purchase plans in the UK, the pricing did go down when there was competition in the market, but when the other banks moved out of the market, HSBC, Al-Buraq, it was left with Al Rayyan Bank, who were formerly known as Islamic Bank of Britain. And the reality is, over the last 5 years, the pricing has been, has been difficult for some customers. We've had that issue. It's been 4% plus, 4.5% plus, when conventional bank rates have been, in the current climate of extremely low base rate, they've been around 1-2%. However, the bank has done well to respond to that and has reduced rates. And as Samir was saying, it's a lot more competitive now over the last 12 months, I would say, around 2% to 2.6%, which is great to see the response. However, the simple realities are, and I can say this because I'm not working in the bank or for the bank, is when you have competition, prices go down. And in the early days, people used to kind of remark, this is a premium on faith, this extra price.
What's the way forward? I mean, you have, say, 4 million consumers, Muslim consumers specifically, on your doorstep that are looking for these type of products. What's the way forward in terms of being able to take advantage and support them in their spending power?
Sure. In fact, we are doing a lot. For example, talking about the competitive pricing. When there were other providers in the market, the pricing was higher. So the economic sense would say when basically Al Rayyan Bank is the dominant provider, Sharia-compliant provider in the market, that the prices will be up. But on the contrary, the bank reduced its prices on asset financing in order to enable the customers to have access to Sharia-compliant products. And that's basically the Islamic values that we operate within in the bank. There are more product available currently and offered by the bank to customers. It's just a matter of education and basically...
And marketing, perhaps? Because commentators currently looking at the market say that although there are supposedly these range of products, the uptake isn't particularly as high as they might think it should be. Do you think marketing and, as you said, education play a role? And if so, well, what's the way forward on that?
We do market the products in various ways, online, in basically in printed marketing materials, social media, etc. But I think it's a key to explain to the Muslim community in Britain that Islamic finance and Islamic banking is the halal, the Sharia-compliant option. So for us as Muslims, I wouldn't consider conventional banks or traditional banks as an option because it's pure interest-based banking.
Of course.
So Islamic banking is the only option. So when we think of it in that way, you will find those 4 million Muslims in the UK are coming to bank with Islamic banks, not necessarily with Al Rayyan Bank, with basically Sharia-compliant Islamic banks.
I mean, in contrast, what about non-Muslim consumers. What part do they play in as a consumer in Islamic Bank, and how do Islamic banks structure it? How are they able to treat both of those type of people equally, or are non-Muslims treated unequally, or is it the other way around?
Islamic banking is inclusive for Muslim customers and non-Muslim customers. Although the core customers is basically the Muslim market. Yeah. We estimate that currently we have possibly around 20 to 25% of our customers are non-Muslims. And we treat all customers equally in the same way. And non-Muslim customers, they come to the bank on the basis of ethical banking. Many of them, they feel that they are fed up with the conventional banking and the various scandals in the banking and the way that some bankers behave in the traditional market. And they find that Islamic banking is more in line with the ethical principles.
Absolutely.
Hence
Bear with me. It's time for a break. We'll pick it up right on that point right after the break. So when we come back, we'll examine what extent the success of Islamic banking abroad can be replicated here in the UK. Those questions and more all answered after the break. Don't go anywhere. Hello and welcome back. Before the break, we introduced you to Islamic banking and its development in establishing itself in Western countries such as here in the UK. Still with me in the studio is Dr. Samir Al-Ahmad, Head of Sharia Compliance and Product Development at Al Rayan Bank, alongside with Omar Sheikh, Advisory Board Member on the UK Islamic Finance Council. Critics have said that Muslims are being charged a high-end rate on their mortgages. And then when it comes to deposits, which are more attractive to non-Muslims, there is a much more amicable and attractive rate. It seems to be a big criticism. Dr. Al-Ahmad, what do you have to say about that?
I would say that's not true, and that's not the case currently. If you see the profit rate paid on savings products offered by the bank, it's very competitive. And this is basically represents the cost of funding for the bank. So the bank has to maintain certain balance between the cost of funding for savings that the bank uses in order to provide home purchase plan products, the home finance products to customers, and the rental rate that the bank charges customers on the asset side. So this balance is the margin, the very thin margin that the bank makes for itself as a profit. And if you see currently that the current margin between the savings product, the profit offered on the savings product for savings account, and the home purchase plan, that basically represent a fair pricing in the market.
I guess one of the questions, Samir, then is just following on from that, two things. Number one, you mentioned earlier about the Sharia input and competitive pricing and so on. So when Al Rayan Bank dropped its rates from 4.9 or 4.5 plus down to 2.6 roughly, was that a Sharia decision? Was Sharia consulted in that? Were the Scholar Board involved in that pricing decision?
Yes, the Sharia decision was part of that. However, we need just to clarify one point here. Pricing per se,
yes,
it's nothing, basically, it doesn't have any adverse impact on Sharia. Because from a Sharia perspective, you could set your pricing at any level you want or you wish. However, would that make you competitive in the market? Would customers come to you? So that's one aspect. The Sharia input regarding this is to ensure that the fairness between in the approach followed by the bank and the approval in terms of the Sharia governance in terms of product pricings.
So then, just picking up on that, then, so how did the Sharia analyse from where you drop your rates from 4.5%, you dropped them by nearly 2%, which is nearly a 50% reduction in your rates. So what was going through in the Sharia analysis at that point? How did the fairness spectrum move all of a sudden?
Basically, it didn't move all of the sudden. There was a drop in the rate of return, so the cost of funding dropped down, and this was reflected on the asset side. So because the bank is paying less profit for savings account, then the bank was able to provide a more competitive product and less rental rate on the home finance product. So, and that's the balance I was referring to. The bank eventually wants, it's for the benefit of the bank to increase the volume of sales and customer take up of products, because this means benefit for the customers and benefit for the bank.
Because a lot of Muslims in the community were saying to us at the council, well, we would love to go Islamic, but they're charging mortgages at more than double the price of, or sometimes triple the price of mainstream conventional players. And, you know, we just simply can't afford it. And these are people with good jobs, with 40, 50,000 plus salaried income. So it's fantastic to see Al Rayan Bank, you know, drop the rates and become a lot more competitive, because I think it really is a question of affordability, because before the rates were dislocated from the market, and it's very happy to see that.
That
and
was
the flip
probably
side,
in the first maybe year or two when the bank launched the product. It was a new product, and even the market environment was different. But if you see in the last three years, the bank started dropping its rate because basically it started to be able to offer this competitive rates in the market. And the bank essentially...
What was stopping it from doing so prior to that?
As I mentioned, the cost of funding. The cost of funding for the bank was high.
How long has... I know Al Rayan was IBB previously.
Yes.
But how long has this bank, regardless of the name change, been in existence, approximately, would you say?
Around 13 years now,
so
12 years, 13
having
years.
been established for 13 years, with so many Muslims in the country, it's been, to me, it seems like, and to people at home, it seems like you've had ample time to really take advantage of a market that seems so lucrative.
Basically, there is very good reason for that. First of all, the home finance product wasn't launched from the outset. It was launched towards the end of 2008 and 2009. So after a few years of the bank starting its operations in the UK, and you need to factor the educational process, which is a building block process. As a first bank, or first fully Islamic bank in the UK and Western Europe, it was a very challenging market for the bank to establish its market, to educate its customers, to reach out to its customers. And the bank did everything possible in order to do that. However, this basically, to be able to come into the current position of the bank as a profitable bank, offering full range of savings and assets products, even commercial finance, and being established in the market as with excellent Sharia compliance reputation in the market. Of course, this will not happen in the first 5 years or 7 years. It's a cumulative process that will be built over time.
Okay.
No bank will enter the market and immediately will launch a full area of products and be competitive. Otherwise,
but at the same
their
time,
business model will
you see where I'm coming from. It is 13 years to getting a very fundamental product, not a fancy luxury product, but a very fundamental product to a point where it's even accessible, is the argument. But I understand where you're coming from. Omar, I've got a question for you. What has, as an advisory member on the Islamic Council of Britain, where are you in terms of the contributions that the Council has made in terms of pushing some of these challenges aside and making breakthroughs?
Sure. So the UK Islamic Finance Council is a not-for-profit body that was established to help promote and develop the Islamic and ethical finance market, both locally and internationally.
So education and marketing is a big aspect of what you do.
And what Samir was saying was absolutely spot on. Every day, every week, we get queries in, calls in, emails in from the community asking about explaining Islamic products. And I think there's a couple of points here that need to be noted. Whilst it is somewhat disappointing that the UK market has failed to create a portfolio of retail products, Sharia-compliant retail products, so today you still can't get car financing. I was in a roundtable yesterday with 20 medical professionals who can't get financing to buy their GP practice or financing to get another chair put in their dental surgeries. It is disappointing somewhat that we don't have this asset finance in there. However, Samir is absolutely right. The education and awareness is a massive, massive challenge. And I think there's two elements here. Number one is that we're talking about a different set of principles, which in a weird way our community seems somewhat oblivious to. We've been engaging with riba since we've been in Britain for many, many years, for decades, and we seem open to doing that. It doesn't... For some reason, the community doesn't realise how big a sin it is, and the implications of that. So I think there's a problem there, and that process can only be measured in decades, not in weeks or years or whatever. So there's a massive educational process. But also, there is a challenge that the Islamic financial product providers, the Islamic banks, also need to begin to sometimes provide products which are seen as genuine alternatives. Now, whilst they are structured and they are Sharia compliant, and that is the case, and I totally understand that, we also see the other side of the table at the council, which is the community, who aren't necessarily as financially literate or as structured product people that they can understand commodity murabahas. They just look at the product very simply, and when we do a few things, we begin to shoot ourselves in the foot. So that, for example, is tawarruq, commodity murabah, and when we do benchmarking. So we say we don't charge interest, we charge rent, but then we bring in benchmarking. And the simple reality is, no matter what we say from a Sharia point of view or whatever, that's fine, but from a marketing and from an education and awareness view, it does have an impact. It does confuse people.
Well, I appreciate that, thank you. The next question that comes to mind is looking at the contrast where it has been really successful Islamic finance studies, which is abroad, Malaysia, places like Malaysia, in the Middle East, where it's really, really been successful. There are a lot of banks out there, and there aren't that many here. What is it that they're able to do there that we might well be able to replicate here to help increase the amount of banks and therefore increase the amount of competitiveness and therefore the accessibility of products? Dr. Al-Ahmad, why don't you start on that one?
It's very important to take into account that those countries basically are Muslim majority countries. So they are the main market for Islamic banking. And Islamic banking emerged from these markets, the GCC, the Middle East, and early 80s in Malaysia. So they have the framework. So they developed the regulatory framework, they developed the environment, and they developed the market. That's why they are basically currently hub for Islamic finance. Nonetheless,
so we're
UK
saying
market,
that the pivotal aspect is the fact that they have an Islamic regulatory environment, which doesn't exist here. So is that something that would stop Islamic finance from developing full stop in the future? Because I don't think the UK government is planning to create a separate Islamic regulatory environment.
No, basically, if we are talking about separate or dual system like Malaysia, where there is a regulatory basically framework for Islamic banking and Islamic financial institutions operating in the country, and a traditional banking, so they operate dual banking system. This is not the case in the Middle East and GCC countries, where there is one system. However, it accommodates Islamic banking. So the regulator built a framework within that system for the operation of Islamic banking. Having said that framework is not basically 100% there yet in the GCC and the Middle Eastern countries.
Dr. Al-Ahmad, my
there is
apologies.
still more work to be done.
I'll have to end it there. We've run out of time, I'm afraid. Now, if you have any questions or issues you want discussed on the programme, please tweet us at Islam Channel or contact us via Facebook on islamchannel.tv with the hashtag The Islamic Finance Show, and we'll do our best to address them in the coming shows. Next week, we examine the Islamic mortgage to discover how it compares to a conventional mortgage. But for now, my thanks again to Dr. Samir Al-Ahmad and Omar Sheikh for joining us today, and I'll see you next week. Take care and goodbye.